You might be hearing a lot of buzz around IPOs. In this video, I'll explain what they are, how you invest in them, why they excite certain investors, and where to sign up for alerts so you're first to hear about new offers. So IPO stands for Initial Public Offering, and it's often referred to as a stock market flotation. It's normally broken down into two parts. First is the IPO offer, which is when a company raises money by issuing shares to new investors. Second is the shares being admitted to a stock exchange for general trading. Now, historically, it was uncommon for the companies to let the public take part in their IPO offer, meaning you and I would have to wait until the shares were admitted to trading before we could buy stock. Big investors like pension funds and banks would have traditionally been the only ones dominating an IPO offer. Now that's changing, thanks to various rule changes which are designed to attract more companies to the stock market and have greater access to fundraising. It's opening doors to greater participation in IPO offers, meaning the public should be able to apply for shares in more IPO offers than before, and secure a holding before a stock begins trading on the market. Now, many investors prefer this method as they avoid the scrum that often happens on the first day of trading when prices can move fast if lots of people are trying to buy shares at the same time. And just be aware that if an IPO offer is very popular, it's possible that you won't get as many shares as you originally applied for. So why do companies join the stock market in the first place? It's normally for one of three reasons. First is to raise money to grow the business or perhaps pay off debt. Second, the private owners of the business may want to reduce their stake or even exit the business completely. In effect, they're cashing out. Third, a listing can improve a firm's reputation. Suppliers and customers often prefer dealing with publicly listed companies because their accounts and trading activities reported and made public on a regular basis, creating a greater sense of transparency. Investors can warm to IPOs too for three main reasons. First, they provide a chance to back a company that's entering a new and potentially exciting stage in its life. Second, IPOs often attractively priced to help ensure the stock market listing is a success. And finally, IPOs can offer a quick way to build a holding in a company at a price that's often preset. Sounds exciting? Just be aware that not all IPOs do well, with instances where the shares fall after they begin trading on the stock market. There's no guarantees that you'll make money by taking part in an IPO offer. Before you invest in a company, do your homework. Check out the management, the financial health, competitive edge, and the risks. The good news is that this information is easy to find, as companies must publish detailed information as part of the IPO process. So if you've got your eye on a company coming to the stock market, it's well worth finding out if the owners are selling all, part, or none of their stake. Because if they're selling out completely, see if you can find out why. It's also important to check if there's a clear, strong, long-term growth plan. And if the company is raising a lot of new money, find out how that cash will be spent. Is it for growth or is it paying off debt? IPOs can add an interesting dynamic to your portfolio, but it's vital to do your research to ensure that they fit your investment goals, timeline, and risk tolerance. How do you find out which companies are coming to the stock market? For information about the latest IPO offers, sign up on AJ Bell's website for alerts about upcoming launches. You can also see which IPO offers are currently open and find the relevant information about those companies. And even where you can't take part in a specific IPO offer, it's possible that the shares will be available to buy and sell on AJ Bell's app and website once they start trading on the market. Follow us for more useful content about investing and markets.